The futures market is not the get-rich-quick scheme most people think it is. And the shocking truth is that 70 to 90% of retail traders lose money in the long run. Most people don't realize that even if you make $50,000 in one trade, you still need to show up the next day. Trading isn't winning the lottery. It's a self-employed job requiring constant effort. Think about it like running your own small business, not like gambling away your savings. My name is JD. I teach retail traders how to pass prop firm challenges and how to improve their overall trading performance. You could be the next Nicole who just passed her first prop firm challenge. And Nicole asked, can you pass the buffer in one day? Which you can with Take Profit Trader, which is why I use them exclusively because of the day one payouts. No other firm can beat this, period. Use code 1121 to get 40% off right now with Take Profit Trader. And if you need a winning strategy to pass your next challenge, hey, scan this QR code or just comment below, give me the guide, and I will send you Finally Funded. See the videos of people making thousands of dollars and traveling the world, and you think, I want that? It would be like winning the lottery, but it's not. If I made 50K on my very next trade, it would be awesome, but I would still need the trade the next day because trading is my new job, not a one-time life-changing event like winning the lottery. Trading is a self-employment situation. It's the S in the cash flow quadrant. There are only 4 ways to make money in the world. You're either an employee, you're self-employed, you're a business owner, or you're a long-term investor. Day traders are self-employed individuals. I'm pretty good at this, but not good enough to win without showing up to trade, right? I gotta show up every day. My point here is that trading is a job you own. To make money, you have to show up every day, just like a dentist has to show up every day to the office. That's just the way it is. When you understand that your next trade is not going to set you up for life, you will stop gambling or looking at trading as a lottery ticket and instead clock in and go to work. You could grow an account to 500,000 and lose it in one day because you clicked the wrong button. In the markets, anything can happen. You must understand the game you are trying to play. I look at trading futures as the ultimate way to make a living. No boss, work from anywhere in the world with internet, and you can make doctor level money in under 5 years. With hard work and dedication, you can make a great living, but you have to show up daily and do your job. Don't believe the trading hype out here. Day trading is not like winning the lottery. The market rewards those who treat it with respect and work at it like a good steward. Tell yourself this: there is no reason to revenge trade. I can't get rich today. No reason to overtrade. I can't get rich today. No reason to risk 10% of my account. I can't get rich today. But I can follow a good trading system to make a living that leads to financial freedom. If day trading has you feeling lost and discouraged, scan this QR code or just comment below, give me the guide, and I will send you Finally Funded, the guide that will help you run your self-employed trading business, okay? Success requires the discipline, strategy, and dedication of running a business, not buying a lottery ticket. Now it's time for our work study lesson. Roll it. Hey guys, today is October 16th, 2025. This will be our work study lesson for today. So we're just gonna look at the ES today. We're gonna start at the beginning of the session, follow the price action, see if we can get a trade at the open. And if you've never checked me out before, you're gonna enjoy this. Let's do it. So here we go, guys. Let me get my tool up. All right, guys, so the market opened up right here. We were inside of my key entry point zone. And this is where all the magic happens. All right, so we opened up and, really didn't do anything. Then we just, prices are above the 21 EMA. So you should be thinking long. And your first trade of the day was actually a classic second entry. This one's gonna look pretty good. For those who ask, what's the second entry? How does it look? So let's take a look. Here's a classic second entry. Let me stretch this out so you can really really see this boy, because it's actually almost textbook perfect. Okay, so once we get above the 21 EMA, I will start back here. Let's say, all right, we had this low. Really, we had this low. Really, we had this low, right? Pushed up, came back, we made a higher low. Pushed up, came back, we made another higher low. Pushed up, came back, made another higher low. But notice on this last one, the difference between this one, and this one is when we came back on this one, we stayed above the 21 EMA. That's your signal to go long. I'm trying. I don't know how I can get it across to people. Take all the indicators off of your chart except for the 21 EMA, and you will do so much better. Okay, so we are now above the 21 EMA. So now it's really time to look for some trades, right? And you really got this. This was a low push up. This was a classic high low. I mean, that's beautiful. You got the rejection here. What this says is that there's a whole bunch of buy pressure. It took a lot. Listen, people, I be trying to tell people all the time about these little candles matter. It took a lot of buy pressure to overcome all the sellers who had pushed. Listen, sellers have pushed this candle all the way down to this price. It took double the buy orders to push it all the way back to this price, and then make a hammer that top. Okay, what I'm trying to say is when you see this hammer candle, there's a lot going on there. Okay, it means that the sellers were extremely rejected, and buyers not only overran them, they took off. They took off. Consider this one candle a whole range, a whole trend, a whole chart. So what just happened? Hey, everything I just said is what just happened in seconds in this little candle. But it's our signal candle. It's the trigger to bam, go long. So once you get this, I'm definitely thinking long. All right. So that's the setup. So this is actually the first trade, this higher low right here. And bam, you off to the races. And then those who like to wait till you get above the 21 EMA may have went right here. Low, push up, higher low. This signal candle would have done it out, so you shouldn't have went. But if you just still went on this beautiful candle here, I ain't mad at you. Bam, that was a win. Now, after that, what do you know? We're above the 21 EMA, so we know to go long. The bias is long, no question. You know what I'm saying? No question. We ain't confused. There's nothing to double guess. We're above the 21 EMA. The bias is long. So, and we just won, or we saw a low, higher low work, so we know to go long. So at that point, here's the second entry. You get a high, all right? And the way I like to look at it a lot of times is just I look for two legs back, or two lines back, or two colors back, or two rows of red back in this case. Here's row one, then we push back up, okay? Then here's row two, all right? Those are your two legs back. It's also my market cycle, very small case of it. Trend down, trend break, retest the new low. See it? Market cycle. Market cycle is everywhere. The market cycle is what sets up this second entry. Because if I was trading this, I would be like, here's leg one, here's the trend break, here's the retest. This market cycle is over. We should be going long. You hear me say that all the time. And so I would know we should be going long. So I would count from the top. And I would see like, okay, I got a high, lower, lower, lower. I call that the first up. And then we got lower, lower, lower. As soon as this candle breaks higher here, the second entry is on. Then you get a huge, beautiful signal candle that closes on this top, matching bottoms down here. Okay, matching bottoms down here. Then you got a huge candle closed on this top, man. This is candle. I might need to rename this work study lesson candle theory. Okay, this is a huge, strong candle, people. Look at this. We were trucking. The sellers had this thing trucking, and then they just hit a boom. What makes them just stop right here? I'm gonna tell you what makes them stop right here. Buy limit orders that were sitting here. A bunch of them, a ton of them, enough to stop this downward momentum, overtake all the orders, change the direction by having more buy limit orders than sell limit orders, and then boom, enough to get this party really going. All of that is in the second entry. So you get to push down, first entry, push down. You go right here on this candle. That is a beauty. That is so far the trade of the day. And it's a second entry long. Let me do that. That's a second entry long, folks. From the top, push down. First entry, push down. Second entry long. Or just look at the two legs back. One row red, second row red. Man, hey, boom. They were trapped, right? They're thinking that people who went here were trapped. And they probably did lose, but people who went here and put their stop here, oh, super trap. People who put their stop here, super trap. People who had their stop here, super trap. This is exactly why prices took off, because the sellers had, there were sell orders, right? People who went short, they had their stop. If I can get my pen to light up, they had their stops. Sorry, I done messed up. Thank you. They all had their stops right here, you know. My bad. They had their stops right here. Boom. Some right here. Boom. The others had their stops right here. Boom. The other had their stops right here. Boom. Look at how it shot through there. Those stops fuel the momentum. So when you catch a second entry, when y'all hear me say they're trapped, that means that people who went short are now trapped on the wrong side of the market, because it was a trap to go short, because the overall bias is up. So what you doing going short right here? You go stick with the overall bias, stick with the range fade. We at the bottom, so we should be coming to the top. All that stuff plays in effect. These people are trapped because they didn't read the price chart. So they're trapped, and boom, it fuels the takeoff. And that's how you get that, man, that's how you get that takeoff. Then after the takeoff, your range, so you gotta be careful through here. And then we break out the range, come back, try to test it, didn't make it, and then shot back up again. So let's see where we are. Oh, then we hit the top. Now, once we hit the top, you got to be thinking range fade, because we got to the top and then we break. And so right here, we get this high. Prices pushed back down, came back, made this lower high. Then you get a what? Beautiful signal candle. This is classic. This is one of our classic trades here. You get a beautiful signal candle. Why do you go here? You go here because you pause right at the key level that you had drawn hours before. That's number one. Then you get a lower high setup, right? Then you get a signal candle. Man, look, you put a buy, you just put a sell stop right there and you go. Okay, I can't, you just go. Now this one didn't take off to the other side, but that happens sometimes. But for what I would have been doing, it would have been a win. Shucks, I would have got in at, just say 67.40. I mean, 67.35, that's 5 points. That's all I need. That's all I need right there. So that would have been a win. But then we pulled back up and touched again. And here we are. All right, we are all caught up. So with us being all caught up, let me squeeze down, see what we're looking at. All right, all we have is a huge range up, people. Huge trend up. So we're inside this range, but look at the price action. Zoom out, take a good look. If you do that, you can really see what's going on. So what's happening is we're in a trend channel, a real nice, crispy looking one. I start at the very bottom, go through the very first body, which is right here. And then this was the top. Well, I'm dropping it from there, so I could really put it here. I'm not going to. You could put this one here. You can put this one where you want. You can put it here. You can put it at that top. I'm actually gonna do something a little different. I'm gonna put it right at this top. I'm gonna make it tight. No, I'm actually gonna put it where, since we're doing this after the fact, I'm just gonna put it where most of the touches was at. And the top would have been something like this. This one is a little different because it's so far after the fact. But all I'm trying to show you is that, hey, we got a trend channel working, right? We got a channel working up, but now, hey, we got a trend break. We got a trend break, and then we actually got a trend up, trend break, and a retest to new high. I mean, it's small, but it's there. I mean, it's extremely small, but we got a trend up, a trend break, and barely retested to new high. So, hey, we in place. That what I'm saying is this market cycle could be over, especially since we paused at our key entry point level once, twice, and boom, we're starting to head down. Now, look. So, hey, this could be one. And so, like I'm saying, I already put this in the community, right? If you don't know, I do have a community. It's only $10 a month, and people are increasing on the sudden because they get these markups. What am I talking about? Let's take a look. All right, here we go. I sent this out an hour ago. It's currently 9:21, so that means I sent this out at 8:21. And overnight, we traded up, hit the key entry point, 67.44. We mysteriously paused, right? Range rules apply. So I've already said, hey, If we touch here, go short, you know, if we stay under the 21 EMA, the target's the other side of the range, down to 66.96. All right, you know what I'm saying? So that was at, I would say right here, 739, right? So back here, you know, back here somewhere, 739, you would already been knowing to go short. So that means these touches right here, somebody in the community should have already won. Somebody in the community should have already won when it pulled back, touched right here again, and made another high, lower high, real close that time. Those was real tight, but it's still a low high, still a lower high. Or they in it right now. Somebody should be in it right now trying to get that money because they just saw this as a high, come down, came back, lower high. Then look at this beautiful signal candle they just got right there. Ooh, I hope y'all in it, y'all. I hope y'all in this community. I hope y'all in there, Titan trading community. We in one. I gotta wait for the open, man. The open is going to happen. I want to go right now, though. The open is going to happen in 8 minutes. We're gonna hold out and wait. So here's the call. Range rules apply. We bounced at my key entry point level for the second time now. The target will be the other side of the range. When the market opens, I wanted to push up and touch it one more time to trap any other people thinking we're going to go long from here. And then I will catch a nice lower high or wifey trade off the 21 EMA going short. That's the call. And we're going to see what's going to happen in a few minutes. I'll be back. Yeah, I mean, I'm really hoping somebody in the community is already, they done for the day. I mean, if they went right here, matter of fact, let me show y'all something. This was a, ooh, if I can get it up fast enough. Show you this real quick. Because it was sitting right there too. Since I just explained this, that, you know, you need to actually be counting from both sides. So if you're actually counting from both sides, you would have saw a beautiful second entry, basically a beautiful second entry short. You would have saw it if you was counting from both sides. Let me show it to you. If you didn't see it, if you can't see it, you know what I'm talking about right here. If you started this low, this is a push up. When this candle right here breaks lower, that's first entry. Push, 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 push. Where's the first break? Right here on this beautiful signal candle that closed lower to everything to the left, nearly closed on this low. Huge, big, strong body. Look at that candle, people. Candle theory. That boy is humongous. This is a push up, first entry. Push up. That's a second entry short off of a key entry point level. It don't get no better than that. Bam. And we going to the other side of this boy. I just hope that, you know what I'm saying, somebody, I just hope that some Titan trading, I just hope that some trading Titan community member is good right now. So we're going to be good in a minute too. We're going to let this puppy open up, man. I think I know what I'm doing. So we're under the 21 EMA. In this situation, wait for a touch. I'm going to wait for the prices to come back, try to touch this 21 EMA. So right now, we're probably looking at a wifey trade in this situation. It's going to be a wifey trade off the 21 EMA, headed short. Or we can get a second entry short. I would rather the wifey trade because from here, the second entry short would take longer to develop. That's the only reason why. But I definitely think we're going to push up at the open and shoot down. Now, if I had just went when I was talking back a minute ago, I'd be done with my day already too. And sometimes, you know, but I like to wait for the open. Sometimes. But this time might have been a time to go because, I mean, we was right off the key. We was off the key entry point level. But if we come back and test one more time, because right here, y'all want to see this range that's developing? I'll show y'all something. I can make a range right now for these two touches. See this range that's developing? Now we got a setup to look for. Since we know we got a range right here, what you would look for is a breakout, pullback entry, bam. Something like that. Or we want to come back up here and again touch the top. If we come back up the top again, that's actually awesome because then we're going to be getting a range fade off of the top of the range and the top of my key entry point level. So right now we're a little bit too far away from the EMA, so I definitely expect us to shoot up at the open, trap everybody, and then get a nice, probably a nice wifey right off 21 EMA headed short. Yeah, that might be the call. Nice wifey. We're too far away right now to take the breakout pullback. I would rather take a range fade because the distance we are away from the 21 EMA, man. It's just your best entries. I haven't said this in a while. Haven't said this in a while. Your best entries are on, off, or around the 21 EMA. So that's that deal on that. Oh, we breaking. We breaking. Volatile time. So hey, we could just drop like a rock right now. Who knows? Who knows what could happen? Anything can happen. It's the market in crash time, crash season. All right, like I said, at the open, we gonna shoot up, trap everybody, probably get a wifey trade, something off the 21 EMA to break out of this range and head to the other side of the big boy range. That's my call. I can't say that this is gonna be easy money because a lot can happen here. If I had already went, it'd be easy money. I'd already be locked up, locked in, and good. Countdown: 9, 8, 7, 6, 5, 4, 3, 2, 1. Game time. My favorite time of day. Here we go. We're getting a breakout pullback.
Order submitted.
We broke out. We pulled it back. There it is. There it is. And when we come out, gotta wait for it. I'm looking for a big signal candle. Like that. Close on this low. Nope. Didn't trigger, folks. Now we're making a low push up. If we get a higher low to come back in this range, because it didn't break. Notice how it's pausing at this line we drew earlier. Isn't that interesting? Now it's making a low push up, higher low. This is the signal candle, but it's dudding out. All right, now we can't get above the 21 MA. And now we getting that red, green, red wifey setup. Look, here it come. Wifey setup. I'm calling this a breakout, pullback, boom. Breakout, pullback entry. If it triggers, we'll put our stop above structure. Now we're back in the range. Up, paused at the 21 EMA again. Let's see if we push through. Okay. Boom. All right. There we go. Told y'all it was gonna be. Couldn't call easy money, y'all. I could not call easy money, but look at price action. I drew this range off of this top, this bottom, and look how it held. All right. And so if you was trading, I said if you was trading, hey, if you wanted to take the range fade here, you could have, right? But I'll tell you what's happening is the second entry short. Push up, first entry, push up, second entry short.
Order filled.
Where? Second entry short, folks. Here we go. Break through, break out, break out, break out. One more candle down, one more candle down. Hold the line. Oh, we're about to get the wifey trade. Or we about to just break out? Nope, just break out. Break out, close any low. That's the win. So that's it. If you need to learn how to trade, you need to learn how to read a price chart. Just comment below, give me the guide, and I'm gonna send you Finally Funded, the guy that is helping traders finally better read a price chart and increase on the sudden. My name is JD, and until next time, I wish you increase on the sudden. Bye-bye.